I want to get returns quickly and big returns on my investments. I've said this so many times. I hear a lot of other people say this. And I've discovered something that to me, it's really contrarian. Um, and it's that, well, there's this fact that's out there. There's been multiple articles written about this. And they say that the best investors, the best stock investors, are dead. And here's what I mean, in case you haven't seen any of these articles. The people who have their money in different stocks, different investments, and maybe they didn't set it up correctly so that their family could take it out if they pass away. They didn't have real good estate planning. So their money is just in the investments. So they put their money in and then they did nothing to it. The people who did that happen to have the highest returns. And so, but these were actually people who passed away. They put it, that's why they didn't do anything with it. They started looking at like, who are all these people generating these amazing returns? Found out that they're all people who passed away and didn't try to game the system. And so I share that because the contrarian view, the best way to get, in my opinion, from this data, the shortcut to getting really high returns is time. Time is actually the shortcut. Time and consistency. And what this means is not changing things when the market shifts. Right now, last couple of days, the Magnificent Seven, S&P 500, all these stocks are just going down day by day by day. I see it too. I'm watching my investment portfolio like go down and down and down as things are dropping. Same with Bitcoin. But I'm not. Here's what I'm not doing. I'm not selling them all off and buying U.S. Treasury bonds because I plan on that money being in there for 20 to 30 years anyways. And the stock market's going to rebound over time. It may get worse. It may continue to go down and go down and go down, but it's going to rebound over time. If it doesn't rebound, if the entire world economy collapses, well, we have much bigger problems. If the entire world economy collapses, it doesn't matter how much money you have because money will not be valued. Think about like Walking Dead when the zombies were out. Nobody cared at all about money. They were like guns, food, security, right? That's all they wanted. That's all anybody wanted in the zombie apocalypse. The economy broke down. There were some other things going on, zombies and whatnot, but that's an example of when if the economy fully breaks down 100%. So it's like just leave it in there. Act like a dead investor. The only way that I do things different from the dead investors is that I consistently contribute. They don't keep contributing to their accounts because they're dead, right? But I just can't consistently contribute. Now I do have other things that I invest in that are different, right? Like I plan on investing in real estate, and that'll be different because if you have a rental business, a rental property, it's really like a business because you do some value add to it so that you can have a little bit higher rents and compared to before you did the value add and making sure that it's keeping up with rents in the area and the neighborhood with the market and you're getting a return on that, right? Especially if you have multifamily where you have like 6 units and up, the property that you sell for that, and this is just me regurgitating stuff because I don't own any of these properties. It's just me doing research. But the whole point, without going in the weeds there, is that that's a little different because you're actually doing things with the investments and it's like a business. If you own a business, you have to do things in the business for it to be profitable. The thing with stocks is it's really passive. It's like if you just invest in the right stocks, the ones that are proven to perform, S&P 500, index funds, things like that, just leave it in there. That is the trick to get high returns fast. And yeah, it's going to take 20 years. That's fast. That's actually fast. I mean, when you consider the amount of work that you do, nothing, you just put it in there and do nothing. They get good returns living your life, doing other stuff that you want to do. It's a pretty good deal. Wait 20 years, then you could take it out. You could buy other investments, or you could just leave it in there, right? You accumulate enough in there. I think like for McDonald's stock, and don't quote me on this, but if you have $1 million in McDonald's stock, you'll get $20,000 in dividends around there every year. So if you get your portfolio up, so you have a couple million in 20 years, right? I'm not talking like tomorrow. In some of these stocks that are giving out dividends like this, like you can have your money in the stock market and getting enough dividends to just live off of. And you probably worked for these 20 or 30 years while you're doing this. So then you have a retirement as well from work. Maybe you work somewhere that gives you a pension. And it's like, you're good. You're good to go. You get your dividend checks coming in. You live off that. You get your pension, your retirement, 401k, or whatever it is there. That adds to the dividends. You live off of that. And you have a couple million in stocks. And if you really need to get some money for whatever real quick, you could just take a loan out against your stocks instead of pulling out the stocks. But that's it. That's the trick. That's the hack. The hack is time and consistency and not pulling out of the market when everyone's scared, like right now. Just keep it in there. See you in the next one.